So you want to know, are there new opportunities when it comes to real estate as we enter a new year? And is it a good time to buy, sell, or invest? Well, as always, on this month's edition of the National Housing Market Update, we'll let you know where are the opportunities in real estate and what should we be looking out for in the new year if we're thinking about buying, selling, or investing in real estate. Thanks for sticking around. And you're right. As we look at a new year, new opportunity, new possibilities, as every single person goes through each and every year, experiences and life events that lead to decisions around what should I do with real estate, meaning the place that I am and the place that I want to be for the events that I'm looking to experience. And we want to say thank you to everybody who continues to follow us on a monthly basis, keeping you current. However, as you look at what we've started, you know you've been watching the weekly National Housing Market Updates, really keeping you updated exactly what's happening with inventory. As we know, across the nation, we're starting to see that number decline month over month in the available homes that are on the market. And as we continue to see what is happening with supply and demand, which works in the favor of the educated agent as well as the educated customer, or let's just call it client when it's time to transact. And so as you decide what your real estate goals are for 2023 and beyond, is just know that no longer is it a world of putting a sign in the yard and seeing a home experience quickness in everything that is real estate, whether that be from the attention of the marketing, the amount of showings of people that are coming through the home, and leading into how quick or how many offers you get on a property. Now, remember, as we look at the educated consumer, the overall goal is to help you make decisions. But in that, for today's context, let's revisit 2022 and what really led to a lot of the concerns around the housing market, similar though overall to the last several years, which was, could it remain this strong? And mortgage rates are exactly where we kick off on this month's segment. And as you looked at the 30-year fixed rate doubling last year, just remember, this has never been seen before in history. So when something has never been done before, there are psychological impacts. And for many people, they don't quite understand last year was filled with a lot of psychological impacts in the decision-making people either made or decided not to make and wait, which led to a lot of change as we went through what we will call a correction. So as you look at 3+ years of never have I ever, meaning how often have I needed a vaccination to attend certain events, wear a mask, or my kids not be able to attend schooling, is we went through so many never have I evers, as well as in real estate, never have I ever seen a home appreciate so much in one given year due to such a lack of demand. Or never have I ever seen mortgage interest rates at the historical lows that they were. So you can see when you experience so many never have I evers, we're going to have a lot of psychological impact that also leads to certain events while you go through what we went and experienced, which was a correction in the housing industry. So if you look at a couple of our past monthly market updates, we've been sharing for any consumer not educated in the historical trends of how the 10-year treasury yield has had an average spread of about 1.7% to the 30-year mortgage rate. Now, you might ask, though, well, then why are mortgage rates not at 5.5%? Remember, if mortgage rates were at 5.5% right now, we'd be seeing a flood, most likely, of demand and buyers to the market, while we still don't necessarily have a lot of available homes since inventory is still extremely low. As you look at overall, we also experienced certain economic uncertainties last year, or volatility, anxiety around what is exactly happening with inflation. Are we doing a good job getting it under control? what's happening with the job market, what's happening with income and spending. And so as you look at why things are a little different is, yes, if you can see from 2000 to 2021, we saw that average yield be right at about 5.28%. And so as we look at right now, if that's where we were going to be, we'd be right along the lines of mid 5.5%, but we're actually hovering around the 6% mark. However, as each month continues and we start to take away some of the psychological fears and just stay in the data, you can see from this slide, the panic is starting to subside, is that as we went through 2022, the growth in the difference between the treasury and the mortgage fixed rate, you saw increase the spread or the yield, the difference between the two. And you're starting to see what happened in October, November, December, and now January is as mortgage rates start to come back down, we're getting closer to that treasury 10-year yield. And that's because we're overcoming some of the fears that people are having with jobs, with the economy, and overall inflation. Now, are we saying that it's under control? Absolutely not, which is why we're bringing you the weekly housing market updates as well as the national housing market update. And you also have the local First to Note Colorado for those of you natives. So as we continue to connect the panic starting to subside, you can see there's still a 1% difference in that overall where the 50-year average spread has been in the 10-year treasury and fixed mortgage rates. So we still have some work to do, but know that that line you can see is starting to decline. And that's exactly what we're expecting to have with mortgage rates. And many people are asking, so are we saying that mortgage rates have peaked? And for a lot of experts, they are saying yes. We'll continue to follow that each and every month. So then that way you can make a choice of being confident and hopefully not confused. You see, the difference between confidence and confusion is action. If we're in the middle of this and we're leading towards a level of confidence, we can start taking action, which is just learning about the steps and processes of making real estate investment, whether that be purchase, sell, or invest in real estate, an opportunity for you while it presents itself throughout 23, 24, and 25. You see, because what do I mean by opportunity? Well, Lawrence Yun shared the upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. So what he's sharing is that as we start to see, which we saw back in August and November, when mortgage rates started to decline, many people said, now I am back in demand or desiring real estate, which unfortunately, as we enter this year, if we don't start to see more available inventory, meaning home sellers saying, I'm going to sell my property, is that we may experience more competition again. And this is what he means by the opportunity for people in the current market. So David Stevens, as you see, former Assistant Secretary of Housing, so be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners should view this market right now as a unique buying opportunity. Well, what does he mean by unique? Remember, less than 4 months of inventory is a seller's market. And right now you're seeing homes available on the market and buyers are being able to have an opportunity for what? Patience, time, and also deals for those that unfortunately did not follow the market, or maybe their marketing or their agent's experience isn't quite advising them to understand the current market. And now you and your professional on the buyer side are able to take advantage of an opportunity. And this is why information is so critical and so important. But what do we mean by an opportunity? Is an opportunity for first-time home buyers who don't have a large down payment, VA buyers who are coming with zero down payment, As we start looking at contingent buyers, meaning you need to sell your property, but you want to buy one first, getting your offers accepted right now, which over the last couple of years, that group of people wanting to enter the housing market did not see a lot of opportunity unless they were willing to practice in the way that the market conditions required the last couple of years. And for a lot of people, almost 40% did not enjoy purchasing a home in that type of market. So if we do not see inventory rise and we continue to see demand come back, there will be more competition. And this is why right now it's a great opportunity for a lot of buyers. Now, the home price update for many people, as you can see within your local markets, most places in America year over year still saw home price appreciation, meaning the home values at this time this year are greater than where they were this time last year. That also is for the nation, but people are asking what's happening or what are the experts forecasting for 2023. As we start looking at our major 7 forecasters, what we like to look at is the one agreement, which is that no one can agree on anything. You can see you have as high as 5% home price appreciation. You have as low as 5% depreciation. But as you start looking at this from all the reputable forecasters, no one's calling for a major impact. And what do I mean by that? Is as you look at the home price appreciation pre and post pandemic, okay? The percent of appreciation before the pandemic, you can see from 2017 to 2020 was only 12%. So 4% appreciation each year. As you start looking at what happened in 2020 to 2022, we saw over 38% home price appreciation. So this single slide shows there's no free fall, or let's just call it bust or boom. But what we do have is correction, and you may have to give back a little bit of the percentage that you gained. But every single person who experienced housing practices is going to be up no matter when they did it, unless they purchased in the last couple months where we've seen some of this correction occur. Now, as you start looking at what happens when home price appreciation slows down, is sometimes it's due to the share of homes having their prices reduced. As you can see that since April, we started to see a larger percentage, but not a great amount of percent. You could see that almost on only one of those 8 months did we see greater than a 1% increase. Remember, in any traditional market, you're going to have price reductions. Roughly about 1/3 of all homes that sell will need a price reduction. We started to see that number get into the 40 percentile. And in some of the extreme markets like Idaho and Phoenix and Austin, yes, that number was even upwards to 60%. But remember, guys, that was only during that quick correction phase where we saw those mortgage rates double over a short period of time. That correction has now already corrected, and we're seeing price reductions decrease across the nation. And as you can see here, the month over month change in home values for the home prices is that they were nowhere near hitting the bottom. You can see that less than 1% was the average amount of depreciation that these markets saw nationwide. And it really was only for that period of time of July, August, September, October. And now we're getting into hyper local real estate markets, which is November, December, and moving forward. As you know, following the Colorado housing market, we've continued to see home price appreciation happen again after we saw for about 4 to 6 months the depreciation, but only month over month. You can even see across the nation here, depending on the readings for November and December, is that based off the amount of appreciation January through June, is that we're still going to see a year over year home price appreciation, meaning home values being greater now than they were this time last year. Also have to remember that's on a very long period of home price appreciation for most people and places, more than 10 years. So overall, we must control the narrative. And this is because media, friends, and Facebook use headlines to discourage, or they just share what happened this month without the context of what real estate is, which is never a month by month based market. Real estate is a long-term investment, and that's what they don't share much about very often. As you can see, we're still seeing over 11,000 houses sell every single day. Now, why you might see a lot of people talk about the change in the market is because that's dramatically less compared to where we were last year and the year before, which you're right. We saw an extreme amount of people enter the housing market because people are selling homes after they own them for 1 year, 2 year. So we've seen a lot less people transact, but that has nothing to do with home price appreciation unless there's that psychological impact to the headlines or the narrative. What it really is just we're getting back to a normal market. In fact, 8 homes are selling still every single minute. And that might be the right time for you to sell soon as well, or it might be the right time for you to wait, depending on what you continue to learn about the market and what you're trying to do strategically. What I mean by that is there are alternative means of financing. For some people, waiting may not produce the best opportunity, but the goal of not having to pay a certain mortgage payment because of where rates are today, there are a lot of things like adjustable rate mortgages, buy downs over the next 2 to 3 years. So then that way you can take advantage of a certain monthly payment in your mortgage. And as you can see from Lori Goodman, the risks of ARMs were substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's ARMs are not the risky products of 2008 or even the pre-bubble version. ARMs are no longer something to fear. In fact, they could help borrowers save money and reduce barriers to home ownership. The interesting part is for a lot of first-time buyers taking advantage of these programs, they don't look at them in the same historical way that some people do if you've been in home ownership for the last 20 to 30 years and having been through the last mortgage crisis. So the goal is to take away an understanding that says, gosh, temporary rate buydowns are a hot trend for mortgages as borrowers face higher costs for home loans. Some buyers are exploring alternatives to traditional mortgages in a period of rising interest rates that's expected to continue into 2023. Buydowns are a less costly alternative to traditional fixed rate mortgages. And for a lot of people don't quite know what buy downs are, what buy downs allow you to do is the seller is providing you this alternative financing by providing you a credit because they have the desire to get their home sold. And that's what we mean by the biggest opportunity right now. We're still seeing home price appreciation. Inventory is still extremely low. However, there's a market where there's less people out there. And as you can see, that compared to 2021, as of right now, we have a lot more available homes on the market. The goal that many people had. As you can also see, every single month last year, we saw less and less people get into the market, which is giving you a strategy or an opportunity that many people didn't have before, which is it's giving you time to come up with a strategy that works best for you, to research, learn, and invest in these products. So then that way you can make the turn. And the turn leads to the confidence with the rise of the Formula One fans all across America. They understand that for a lot of people, we need to slow down into a turn. But as you look at these high-end race cars, what they do is they accelerate out of the turn, coming out of it, and that's where there's a lot of opportunity to make up room on a track or gain an advantage. And for a lot of people looking to sell, buy, or invest right now, if you can take advantage of a lot of the opportunities right now, this is the slowdown that we're running into a turn. However, remember, every single recession or any type of economic slowdown is then led out through real estate. So right now in 2023 could be a great opportunity for many people. And for those that are continuing to hold on to their real estate and wait, that is never a bad decision, as we'll continue to keep you updated every single month, every single week through 2023, so you know exactly what is happening with home prices. And when the time is right, schedule a 15-minute strategy session, and we'll share more about what's happening in your specific situation. And if you need help across the nation, remember, I'll connect you with the top 1% of agents all across the world. But from me to you, a very happy new year. I hope that all your goals are well along their way of becoming consistent and you finding commitment towards it. And if real estate is one of those, we are committed to keeping you educated. And always remember that keeping current matters.